Hello guys, Joseph here. Okay, in today's video we're talking about the order block trading strategy. Okay, so we start from the basics. What's an order block, how to identify an order block, and which order block to use and which order block not to use. Okay, so guys, if you've not watched the previous videos I made, especially the video on market structure part 2 and liquidity imbalance or inefficiency, if you've not watched those two videos, you not really understand what I'm saying here. So you have, if you've not watched this video, I think I would just advise you to go back and watch those videos because they are like the foundation or the building block behind the concepts taught in this strategy. Okay, so now what is an order block? What is an order block? Okay, the order block strategy is simply a smart money trading concept. Okay, we are just trading alongside institutions or bank. Okay, we're just trading alongside institutions or bank because for price to move from one point to another, let's say for price to move from this point here to this point here, okay, large sums of money is required to make the move from here to here. So we retail traders with our micro lot size of 0.01 or 1 lot size or 2 lot size, or those kind of lot size or those kind of trading accounts cannot make price move from one point to another. So institutions or banks, they are the only ones that has the capacity to move price with such volume. Okay, so basically this strategy we are just trying to figure out when institutional traders are in the market and also trade alongside them. Okay, because for you to, if you place a trade, for you to make profit, price has to move in your favor, price has to move in your direction. Like let's say you place a buy trade here, for if price has to move from this point to let's say this point for you to make profit. Okay, but we retail traders, we don't have that capacity to move price from one point to another. So we institutional traders are required to make that move. So basically we are just trying to figure out um where where institutional traders, where they are present in the market and trade alongside with them. Okay, now so let me show you this scenario. Okay, a scenario whereby price is forming a range. Okay, price is forming a range like this. Okay, price is trapped in this range. Okay, because let's say maybe because there's no volume. Okay, price is trapped in a range like this. Then you now see a move that comes this way, maybe we moves let's say mid of this range, then comes down here, clear the liquidity here, then comes back into the range, breaks it, goes breaks it also, comes back for the test and start going upwards. Okay, sometimes if you look at the chart you find this kind of patterns. Okay, maybe price is trapped in the range, then you see two long candles that make a down and an up move, clearing liquidity from both from clearing the sell side liquidity and buy side liquidity. Okay, because why they simply move price this way is because for price to move from one point to another, liquidity is required. Liquidity is required. Okay, so they need the banks, they need to grab liquidity before moving price in the main direction that they want to move price. So now for here now, maybe people that are just buying the bottom and selling from the tops of this range. Okay, they've been making profits from here and here. This is where they will lose, or this is where they lose their money. Okay, this is where they lose their money. Now from here they will push price. If you start buying from here, they'll push price upwards a bit, making you happy a little, then move price downward, taking out all the stop loss around here, taking out all the stop loss around here. Then there are some traders that trade only breakout, because the breakout move is where the volume is. So there are traders who are trading only breakout trades because they've seen this range, they've seen their price is trapped here, and they know that their price will definitely break this range and move upwards or downwards. They might come here and set a sell limit, a sell stop order here, so, a sell limit here. So when price comes and break this range and start moving in their direction, it will trigger their sell limits from here. to trigger their sell limit. Okay, trigger their sell limit maybe from here, okay, maybe from this point, trigger their sell limit. Okay, maybe they will think their price will come and tap it, then trigger their sell limit and start selling downwards. Okay, but this long candle will just come and penetrate and trigger their sell trade, then take it into loss. Okay, if they don't have a stop loss order placed just below this order, this will take them into massive drawdown. But if they have a stop loss, to tap into it activates their order, then take them in loss. Then here also, anybody that have plans to sell from this place, when this price gets here, it will trigger their order, then take them in loss or trigger their stop loss. Okay, so any stop loss that is just above this price here, okay, this movement will clear all the stop loss, then come back for a retest. Okay, if you're having maybe someone having a buy order here also, this retest is to trigger the buy order, and maybe you have a buy order here and you just place a stop loss just below it, maybe somewhere here. But this retracement will take out that stop loss before price finally move in its direction. So this is just basically how they move price, because they don't really want us to make, they don't want we retail traders to make profits. Okay, so they just find ways to always counter our trade. So but basically the order block trading strategy just be trying to figure out how institutions, how banks, how they are going to move price, okay, and trade alongside them. Sometimes you see that price okay, maybe you see a buy trend like this, price comes down a little, okay, then comes back again, then continues like this, okay, come back maybe here, then continue going upwards. Sometimes you just see price rallying this way. Okay, so this is a institutional move. Now from here, this is where this is where this started moving price. They took price upwards, got here, they came back to mitigate their order. Okay, they opened the order from here, so they came back here to mitigate the order. Okay, now then broke from here again, started going, then broke structure. They broke structure from here, broke the structure. Okay, the structure was broken from here. Okay, the break structure with this move, then comes back again and mitigates the other block here. Come back to mitigate the other block. Okay, there's an other block here. Come back to mitigate it. Okay, come back to mitigate the other block here. Okay, before price continue going upwards. Okay, so this is just how they move price sometimes. So we are looking out for price to come back to that other block to mitigate it before going upwards. So that's just basically how price is being moved in the market. Okay, so okay, let me just get this last one out. Okay, okay, all right, so now how to identify an order block. Okay, so how do you identify an order block? Okay, so an order block is basically the last candle before, maybe let's say price is going upwards and then price came downwards, then move upwards again, maybe move upwards again. Okay, so now from as price is moving from here, because price might come this way, so now the last sell candle here before this upward movement is an order block. Here also the last bullish candle here, the last bullish candle before this reversal downwards, there's an order block here. Okay, so also here the last bearish candle here before this upward movement has left an order block. So basically another block is is the last candle before, is the lowest candle before a bullish move, and the last candle before the bearish move, before a bearish move. Okay, so let me come again. An order block is basically the last bearish candle before a bullish move, or the last bullish candle before a bearish move. Okay, so but like I said, like I said here, for an order block to be valid, it needs to BOS. Okay, BOS simply means break structure. Okay, so now for an order block to be valid, it needs to break structure. But before then, let's go to the charts and let me see if I can show you some examples of an order block. Okay, so now here, the last, like I said, the last candle, the last upward movement before the last bullish candle before a downwards move. Okay, and the last bearish candle before an upwards move. Okay, so here also the last bullish candle, this candle is a bullish candle, the last bullish candle before a downwards move. Okay, so but like I said, it's not every other block that you are going to trade. It's not every other block that you are going to trade. Basically, the only other blocks that we will trade are other blocks that are in line with the trend. Okay, that are in line with the trend. I've already shown you how to figure out the trend in the market structure video part 2. Okay, so don't worry, in the next video I'll be going deeply into the strategy. Okay, so now can you see here, this movement from here to here left another block, so price came down. This is the 30-minute time frame. Let's go to 1 hour time frame. Okay, so price left another block here, then price sold downwards, came here. When it got to this place, it reversed and tapped this other block. Can you see that this other block was respected? Then price came down here, got to this point before finally going back upwards. Okay, there's another block here also. There's another block here. Okay, this is a live market. This is a live market. There's another block here. This is a live market. So this other block here that was not mitigated, that has not been mitigated, price still came back to that other block to mitigate it. This is jump 500. Okay, so like I said before, before trading, you must first of all figure out the trend of the market. Okay, figure out the trend of the market, know if the market is in a downtrend or is in a sell trend. Okay, let's just quickly go to weekly time frame. Okay, I have some money label in here, so this is why my chart is like this. Okay, so as you can see, let me go to 1 hour time frame, the lowest zoom, 4 hours time frame. Okay, see the 4 hours time frame. Okay, let's go to daily also. Now this is the daily time frame. As you can see, the market is bearish. The market has been falling from here, falling. There was a kind of range here, but the market has been selling basically. Okay, so let's go to 4 hours time frame. Okay, this is recent data. The market has been stuck in the range somehow, but the overall trend is still bearish. The market is still making lower lows. Okay, the market is still making lows and lows that are high. This low is lower than this low is lower than this low. Okay, and this low also is lower than this low. Okay, this low also is still lower than this low. So the market is still in a bearish trend. Okay, so the general bias of this market is still bearish. Okay, so now the only other blocks that will be more valid, the best trades that you'll be getting here are sell trades. Okay, the best kind of trades that you can be getting here are sell trades. Okay, so this other block, can you see that this other block price sticking back to this other block respected it? Okay, it did not break it. Okay, so that's just basically how to identify another block. There's another block here. Okay, when price came to this level, we see respected it, but because the overall trend of the market is bearish, price will still come and break this other block. It will not respect it. So another block can be broken also. So it's just a flip from sell to buy. But before price can make that flip, it will always come back to an other block. Okay, it will always come back to an other block. Now, like I said here, for an other block to be valid, for an OB to be valid, it needs to break structure. Okay, for an other block to be valid, that other block needs to break structure. Okay, that other block needs to break structure. This other block here, I made this move. excuse me. Okay. Right now, this was where price. This was the last place. This was the last point price was before it broke structure downwards and got to this point. So can you see that price broke structure here? There was a break of structure here. Here also, this was the last. This was the last lower, higher low. Okay, because from here, price made it higher high, lower high, another high, another higher high. Okay, lower high also and a higher high. But when price got here, price broke structure. Broke. There was a BOS here. That's why I labeled it BOS. Let's go to 15-minute time frame so you can see what I'm showing you. Okay. 15-minute time frame. Okay. All right. Now, price was, like I was saying, made a higher high, higher low, higher high, higher low. Okay. I explained all these concepts in the market structure part 2 video. Then got here and broke structure from this side. Okay, can you see there was a break of structure here? Then price came back to the test, making this order block very valid. Now the direction of the market was upwards. Okay, but now remember that the total directional bias of the market is still bearish. Now price got to this point and it broke structure. Can you see that price broke structure here? Can you see this break? There's a clean break of structure. Then price came back into that place and tapped this last order block, because this was the move, this was the price, it was this point that broke structure. So price came back to that order block, tapped it and sold downward. It still came and tapped. There's an order block here. He came here and he respected the order block. He went back upward and still came down and still broke the order block, because the general bias of the market is bearish. So an order block that broke structure, any order block that breaks structure becomes valid. Now this order block, this move from here to here, it was from this point the price sold downwards and broke structure. There was a break of structure here. After breaking structure, it came back for a retest, but it did not tap the order block. So this trade now would have been a failed trade, because price did not tap the order block. So it broke structure, came here and started selling downwards. Okay, started selling downwards. Okay, now and there's an order block here that price did not mitigate. Okay, so this is just the flip side of this order block. It flipped from the left, from sales to buy, then flip from buy to sell. Okay, so on lower time frames like 15-minute and 30 minutes, you can still see order block. Okay, now in the next video I'll teach you how to refine an order block, okay, and how to place trade using order block. Okay, now I remember I taught you about inefficiency and liquidity grab. Okay, so now in the next video I'll be talking about the strategy, okay, and how to place trade using the order block strategy. I'll still show you how to combine everything, okay, inefficiency, liquidity grab, all these concepts. Okay, when you find all these concepts, they are what make your order block valid, okay, and gives you more confidence to your trading strategy. Okay guys, thank you for watching this video. See you in the next video.